This daily trading pattern has made my trading very simple. It helps me understand the timing of when to take a trade, the location of where to take a trade, and most importantly, the direction of the overall markets and where it wants to head. And after trading and backtesting the strategy for years, I can confidently say this has helped change the way I trade while also getting rid of the guesswork when it comes to my trading. And in today's video, I'll explain the daily pattern that nobody talks about, and then I'm going to show you live examples that I took in real time. Let's get into it. So in today's video, we're going to be going over the one daily pattern trading strategy. And this is a trading strategy that I've been using throughout my past 5+ years of trading. And in today's video, I'm going to share with you exactly how to identify the one daily pattern, along with 3 simple steps on exactly how to execute this strategy. And then I'm going to show you real examples in real time. So let's get right into it. So in today's video, we're going to be going over the one daily candle that we use on a consistent basis when it comes to the markets. And what's great about this candle is that it is only one singular daily candle. So we're not looking at plenty of different candles here on the chart. We're looking at one candle which is formed on the daily time frame. What's also great is that there is no bias when it comes to trading this strategy. We're going to come into the markets with no bias, and we're going to be waiting for the reaction off of our key levels. So we don't have to understand if price is going to go higher or if it's going to head lower. We're going to be using the key levels that we have marked out and then waiting for the reaction that we have off those levels. So we can execute this strategy by using a simple 3-step process. And this is what makes this strategy so effective and powerful, is that all it takes is 3 simple steps. There's no bias, and it's based off of one candle, which is the daily candle. Now let's go on to exactly what this strategy is and how can we execute it. Before we head on to exactly what this strategy is, I want to show you some proof that this strategy does indeed work. And as you can see, this is my P&L calendar for the past 30 days of trading as of the time I'm recording this video. And you can see this is my graph here. And as you can see, I've made close to $90,000 in the past 30 days. And what I want to mention here is that these results are not typical. It took me years of losing in the markets, refining my system and strategy in order to achieve results like this on a consistent basis. So with that being said, now let's go on to exactly what this daily candle entails. And right here, what we have is one candle. And the candle that we have is a daily candle. And this daily candle is very important when it comes to trading. And what we want to be focusing on primarily is the highs and lows of the daily candle. The daily candle is the blueprint. And the reason why this is so important is because there's liquidity resting above your previous day high along with their previous day low. So there's a lot of liquidity resting above and below these levels. So that's why this daily candle is very important. It's also very important because it helps determine our bias. So depending on the reaction that we have off these key levels, we can be trading price towards the upside above this old high. We can be trading the rejection. We can be looking for the bounce, or we could be looking for the continuation underneath. We don't have to come into the markets with a predetermined bias. We can wait for the reaction that we have off these key highs and lows, and then determine based off of the reaction what price is most likely going to do next. The daily candle also gives us a clear direction in the market. So based off of the reaction that we have off these old highs and old lows, it's going to give us a clear picture on where the market wants to head. If we break above, we're going to head higher. If we break below the daily candle low, we're going to head lower. So this really gives us a clear understanding of where the market wants to head in the overall direction it wants to go. And then finally, it gives us clear targets / stops. So what's great about the daily candle high and low is that if we can get above the daily candle high and low, we can have entries close to our daily high with stops just to break underneath, looking for that next external level. If we want to trade price back towards the downside, we can have entries close to our daily high, and then our targets can be all the way back down and towards our daily lows for a reversal trade. So not only do we have our bias around these key levels, we can determine our direction, we can determine where liquidity is resting in the markets. We can also determine our targets and stops based off of these daily highs and lows, and that's why this is so powerful when it comes to trading. And you can see the reasoning and logic behind why the daily candle is so important when it comes to trading. And that's what I want to share with you guys today, and why this 3-step strategy works and why it's so powerful in the markets. And as you can see right here, we're on the lower time frames. And usually what happens when you're on the lower time frames is there's too much noise. So as you can see, we have thousands of candles. We have bullish candles, we have bearish candles. There's so much noise that we have here on the lower time frames that as a beginner trader, we can easily get confused because there's so many things to look at. So that's what's called noise. And when we have noise, it really hinders our ability to understand what's going on the charts. So what do we want to do? We want to focus in on the daily candle. And the daily candle is very important, as I mentioned, is because it gives us a clear picture specifically on the higher time frames. And we have to focus on one single candle. When we only have to focus on one single candle, it's going to be a lot easier than focusing on multiple candles on the lower time frames. So now let's go on to the 3-step process on exactly how to execute this strategy. Step number 1, mark out the high and low on the daily candle. So as you can see right here, we have a daily candle marked out. And what we want to do is mark out the high and we want to mark out the low. And this is what's called our previous day highs and our previous day lows. And these are the areas that we want to be focusing on here coming into the markets. So after we have our previous day highs and previous day lows marked out, what I personally like to do is refine our levels / box in the previous day highs and lows. So a lot of people would just like strict levels on the chart. For me personally, I like drawing areas of price. So what I'm going to do here is box in our previous day highs. Normally speaking, it's close to the wick to the body, and then to the downside, similar thesis. I'm going to box in the previous day lows, and I like doing this on the 15-minute chart, or you can do this on the 1-hour chart here as well. And we're just going to refine our levels into areas to give it a little bit more wiggle room so we don't have to be as precise. So as you can see here, I have the previous day highs boxed in, and then on the bottom, I have your previous day lows boxed in, and these are going to be our key areas in price that we're going to be looking for. But now with this being said, let's go on to step number 2. Step number 2 is wait for a clear direction in the markets. So as you can see, we have our key levels boxed in, we have our previous day highs, we have that previous day lows. Now what we want to do is wait for a clear direction. A clear direction in the markets is waiting for the break above your previous day highs. So we want to see that push above your high for really continuation towards the upside, or we want to see a break below your previous day lows and continuation lower. So there's two different things that we're going to be looking for here. As I mentioned, a break above the previous day highs for continuation, or a break below your previous day lows for a continuation lower. So now let's go on to the next step. The next step is wait for a candle close above or below the previous day high and low. So as you can see right here, what we have is the previous day high boxed in. We have our previous day low boxed in here as well. Now what we want to see is really a candle close below on the 5-minute time frame. I like waiting for a 5-minute candle close below these key levels. If you want extra confirmation, you can go on to the higher time frames. But really now, as you can see, price is heading towards the downside. We really want to see price close below with a weak candle closure, and that is going to be key here for the markets. If we're looking at this to the upside, exact same thesis. Now what we'll be doing is waiting for a candle close above our previous day highs if you want to see any sort of continuation higher here in the markets. So what's key here is wait for a candle close above or below the previous day highs and lows. And as I mentioned, I like doing this on the 5-minute time frame. So after we have refined our levels on the daily chart, we're now going to go into the 5-minute time frame, and we're going to wait for a candle close above or a candle close below the previous day highs or lows. Now let's go into the next step. Step number 3 is wait for a retest off the previous day high or low. So as you can see right here, we have our key levels boxed in. We have that candle close below your previous day low here on the 5-minute time frame. What we now want to do is wait for the retest for a continuation towards the downside. It's as simple as that. We have our consolidation, we have our break, now we're looking for the retest, and now we're looking for a continuation towards the downside. As you can see right here, the next step is waiting for weak price action / candle confirmation. So you can see price breaks below, comes back up. You have weak price action indicated by an upper wick. You want to see sellers step in off this key area of price. You can wait for a confirmation candle if you like as well. I have plenty of videos talking about confirmation candles, confirmation entries, so make sure to check that out if you haven't. And then we're going to be looking for entries, stops, and targets. So you can see price comes back up. We have our entry close to our previous day lows with a stop just to break above. And now we're going to be looking for our profit targets, which is normally a 1-to-2 risk to reward ratio. So in this case, if we're risking $100, that means we want a minimum of $200, which will give us that 1-to-2 risk to reward ratio. So every single time we enter in a trade, we want at minimum to aim for a 1 to 2, and that's going to give us a solid risk to reward ratio when we're trading the break and retest. Now let's go on to the example for the upside. So exact same thing right here. You can see we have our daily high boxed in, we have our daily low boxed in. We end up having this break above here on the 5-minute time frame. Now what we're going to be doing is waiting for the retest off our previous day highs for a continuation towards the upside. As you can see, what we're going to do is wait for strong price action / candle confirmation. You can see price comes back down in towards our previous day highs. This is our key level. Now we want to see buyers step in off this level and a push back towards the upside. And as you can see here, the next step is our entry stops and targets. So we can have entries off of our previous day highs. Stops are going to be underneath our previous day highs, and our targets are going to be back towards high of day and above. Preferably, as I mentioned earlier, we're going to be looking for a 1 to 2 risk reward ratio, which means once again, we're going to be looking for a minimum. For example, if we're risking $100 on a trade, we want to make as a minimum $200 per trade for that fixed 1 to 2 risk reward ratio. So as you can see right here, these are the 3 simple steps on exactly how to execute this strategy. Now let's go onto the charts to see exactly what this will look like in real time. So as you can see right here, we're on my first example and we're on Tesla. And as you can see, we're on the daily time frame. And step number 1, as I mentioned, is we can mark out the high and we can mark out the low here on the daily time frame. And these are going to be the key areas and price that we're going to use coming into market open. So now we can head on to the 15-minute time frame. Once we head on to the 15-minute time frame, now we can refine our levels into areas of price. So what I'm personally going to do is I'm going to just draw this out from the wick all the way down to the body, as you can see right here. So this is going to be a key zone / area that we're going to use for our previous day high. So essentially what we're doing is boxing in our previous day highs. And now you can see there's another touch here in the pre-market as well. And next, what we're going to do is box in our previous day lows, draw it from the wick up into this body here, as you can see. And now this is going to be our previous day low level. So we're going to box in our previous day lows. You can see already how many touches there are just based off of these key areas in price. Now what we're going to be waiting for, as I mentioned, is a clear direction to one side. What does a clear direction mean? We want to see a clear break above our previous day highs for continuation, or we want to see a break below our previous day lows for continuation towards the downside. And this is a continuation setup. There's another setup which is called the reversal. I'm personally not going to touch up on it in today's video, but if you guys do want to see a video on the reversal setup, let me know in the comments below and I'll make a reversal setup, because there is a little bit different criteria when trading the continuation versus the reversal. Now let's go on to the 5-minute time frame, and what we're going to do is go on to step number 3. Step number 3, now we're on the 5-minute time frame and we want to wait for a candle close above or a candle close below the previous day high or low. So as you can see right here, within the first 15 minutes of market open, we have an upper wick, we have another upper wick and another upper wick here. And we finally get that candle close, specifically the body above our previous day highs here on the 4th candle. So this is our signature in price that now we want to see continuation towards the upside after we get that candle close above our previous day highs. So now we can head on to the 1-minute time frame to look for really a retest off our previous day highs for this continued push towards the upside. So as you can see right here on Tesla, we have multiple touches and reactions off this general area. We now come back for the retest once again with a strong candle here with buyers stepping in right off of our previous day highs key level. This is exactly where we can go look long with a stop loss just to break underneath our previous day highs. And now we can be looking for a 1 to 2 fixed risk reward ratio for a push back towards the upside. And as you can see, we end up having our super solid push towards the upside to hit our fixed 1 to 2 risk reward ratio. And this was a great example of using our 3-step checklist using the daily candle. And you can see how powerful this daily candle strategy is. We start off on the daily time frame, then we head on to the 15-minute to refine our levels. Then we wait for a 5-minute candle closure, and then we end up going on to the 1-minute time frame to look for our key levels. So now with this being said, let's go on to the next example that we have for us today. So as you can see right here, we're on our next next example, and we're currently on Apple here on the daily time frame, and we're going to do the exact same steps like we did in the previous example. So what we're going to do here is mark out our previous day highs, and now we can mark out our previous day lows. Once we have this done, now we can go onto the 15-minute time frame to refine our areas in price. So as you can see here, we're on the 15-minute time frame, and what I'm going to do here is box in our previous day highs. Going to drag it from the wick down to the body, and as you can see, this here is your previous day lows. There is no wick here, so I'm just going to drag this up in towards its previous low all the way to the body right here. And as you can see, we just have multiple touches, and we have another touch in the after hours as well. So coming into market open here, the second step is waiting for really a clear direction in the markets for a break above the previous day highs for continuation, or now it's going to be the break below your previous day lows or a push towards the downside. So now with this being said, let's go on to step number 3. So we're currently on the 5-minute time frame here. Let's play out the tape coming into market open. As you can see right off the bat, within the first 5 minutes, we're getting this nice strong push towards the upside above our previous day highs, as you can see here. So now we have that strong candle closure. We can go on to the 1-minute time frame. You can see right here now we're on the 1-minute time frame. You can see nice break above. We're coming back to retest this key level. Now let's see if we can have some buyers stepping in. Right here, this is what's called our confirmation candle. So as you can see, the buyers stepped in right here on the 3rd candle. Now we're getting our confirmation candle that price wants to head back towards the upside and above. This is where we can go look long. In this case, our stop is going to be a break below its previous day highs, and now we can target, as I mentioned, a 1-to-2 fixed risk to reward ratio back towards the upside. Now let's play out the tape. And as you can see right there on Apple, we end up getting that solid push towards the upside, maintained above our previous day highs, which was solid, never had a candle close below this level. And then we end up having that super solid push right back up and towards our key levels. So as you can see, this was another great example of how to use this 3-step strategy. Now let's go on to the last example that I have for us today. So as you can see here, we're on our last example, and we're currently on AMD on the daily time frame, and we're going to do the exact same 3-step process that we've already been doing. So we're going to mark out our previous day highs along with our previous day lows, and these are going to be our key areas in price. And now we can head on to the 15-minute time frame to refine our areas. So as you can see here, we're on the 15-minute time frame, and the levels I'm going to be marking out today towards the upside, you can easily mark this out from the wick down into the body, as you can see right here. Towards the downside, we can mark out the wick. You can mark it out to this body if you like, or in this case, you can mark it all the way down in towards this wick, which is your low that we created on the day previous. So you can extend the areas to both ways. In my opinion, both of them are valid. This day in specific, I had both the levels marked out. I had your previous day lows. I also had the day previous low, and that was the key level that I have marked out. So coming into market open, the game plan was fairly simple. I was looking for the break above for continuation towards the upside, or now I was looking for the break below for continuation towards the downside. I was leaning a little bit more towards the downside because we're at the low of the range, plus we had relative weakness as well. Now let's go on to the 5-minute time frame. So as you can see here, we're on the 5-minute time frame coming to market open. And as you can see right off the bat, we're getting that super solid rejection right off our previous day lows. And we're also getting underneath the low that we created from 2 days ago here as well. So AMD is fairly weak underneath that previous day lows, also underneath that 235 here as well. Now we can go on to the lower time frames. Now let's wait for the retest. As you can see right here on AMD, we have that rejection off your previous day highs. Now we're getting underneath our pre-market lows. Also your up close candle here as well. A bunch of upper wicks right off our key level, which is our 235. This is exactly where we can go look in short with a stop just a break above now our key pivot point. And now we can be looking for a 1-to-2 risk reward ratio towards the downside. Now we can play out the tape. And as you can see right there for AMD, really solid move lower right off the bat for a super solid push lower. Only took about 3 minutes here towards the downside. And this is why this strategy is so good, is because of the areas that we're trading around. Those daily candles high and lows are going to provide the most liquidity. We're going to have the clearest direction off of those key levels. And that's why this strategy is so powerful. So with that being said, I hope you guys did enjoy the video. If you did, appreciate if you guys drop a like and sub, and I'll see you guys next week for a brand new video. Peace.